Want to know the single most important concept in trading? Understanding candlesticks got me from struggling and second guessing in myself to complete clarity on the charts. The framework you're about to learn was for me the complete foundation to becoming profitable and getting consistent payouts. And in this video, I'm going to give you the only frameworks you need to master candlesticks. This video is for beginner traders, but also for experienced traders. To do this, first I will go over how to read candlesticks. Then I'm going to walk you through how to trade them and what patterns are best to use. And with this foundation, I will also give you a plug and play entry model based on only being able to read candlesticks.
In this third part, we're going to talk about the best patterns to use, and we're going to look at some basic patterns. But first, one recommendation: get a copy of this book. This is called the Candlestick Trading Bible. And in this book, you will go over every single candlestick pattern and why you should use every single one of them. So in this book, you can look at reversal patterns, continuation patterns, you can see some entry setups, but it will give you that amazing understanding of candlesticks in general. This beginner bootcamp will give you everything you need to understand candlestick patterns and trading in general. If you want to go even deeper into this, to the nitty-gritty details of candlesticks and every pattern, I would definitely take a look at this book, and you can get it for a few bucks online. The first candlestick pattern we're going to discuss is called the morning, and it's called the morning and evening star. The morning star is a bullish reversal pattern, and the evening star is a bearish reversal pattern. Morning and evening star. Remember, with that important level, we traded into it, and then the body fails to close below that important level, and then we trade higher. That were examples of morning and evening stars. Again, don't memorize the names. It's not needed, and it's not cool. The evening and morning star candlestick patterns occur at the end of the upward and downward trends, respectively, and tend to indicate reversal patterns. So again, look at this pattern at an important level, old high of low, or another important level based on the language you are speaking to the market. The next one is engulfing candles, a bullish and a bearish engulfing. Also a reversal pattern. A bullish or bearish engulfing candlestick pattern may indicate a reversal. A bullish engulfing candlestick, for example, shows bulls, so buyers, outweigh bears, so sellers. So this is a two candlestick pattern. In this bullish example, you see a down close candle, open, high, low, close, down close candle, but the next candle takes the low here of the previous candle, and the body close all the way above the last candle's high. The high and the low previous candle. This is a down close candle, so you're expecting price to go lower, 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 but it doesn't. It goes boom, all the way up. Takes the low of the previous candle, then displaces, gives energy. Same for a bearish engulfing candle. This is the high of the previous candle, this is the low of the previous candle, and if you see this candle, there's not much volume, not much momentum. It's a small candle, small body, and what price here does is open, low, high, close, and the next candle is going up and big momentum lower. So if you see a red candle followed by a massive green candle at an important level, anticipate a bullish engulfing candle, and vice versa at an important level. If you see a small green candle followed by a massive red candle, and with massive I mean a big body, big momentum, big volume, expect lower prices. Third pattern I want to discuss is a doji candle, and that's an indecision candle. So what price did here? Opened, went lower, then it went higher, and it closed at exactly the same or close to the same level as it opened. So bulls and bears, so buyers and sellers, are indecisive. So there's a little balance between them. The doji candlestick is associated with indecision in the market of the underlying asset. This could mean a potential reversal of the current trend or a consolidation. So if you are in an uptrend, for example, and then there's a doji right here, for example, this could mean a potential reversal. Reversal means lower, or a consolidation. And consolidation is, we're going to talk about that in a market structure video and the price. We're going to talk about it in depth in a later episode, but you have uptrend, you have downtrend, and the consolidation is when price does nothing. It just does up and down. So it can indicate a reversal, or it can indicate with an uptrend that we just have a consolidation and do nothing. Now let's talk about more intermediate level patterns. And the first one is a harami. You can have a bullish and a bearish harami. I was looking this up. Fun fact: this is called pregnant woman. You don't need to remember that. Just a fun fact. For example, for a bullish harami to appear, a smaller body on the subsequent doji will close higher within the body of the previous candle, signaling a great likelihood that the reversal will occur. So here you see a doji candle, and the body of this candle is closing higher in this candle's body, signaling this to be a possible reversal. And like, this is maybe a little weird And how you can see this in a line chart is we have this open, high, low, close. Then we go here. So this all indicates lower price, right? We're going lower, lower. But then this next candle, open, low, high, close. Where are the lower prices? We're going higher now. So this would indicate higher prices. Same here with the bearish harami. So you're in an uptrend. And then you see this and like, oh, perhaps we might see lower prices. That's the thing about a reversal pattern. We have an open, low, high, close. Then we're going open, low, close. So we're in an uptrend, higher highs, higher lows. But then next candle, open, high, low, close. You see in a line chart, we are in a nice upwards momentum, but this candle gave it down momentum. So you based on this line, you can of course see we're probably going lower, but this candlestick shows the same. This is called an harami. Now let's talk about inside bars. And this is a continuation pattern. Inside bars are traded within the direction of the trend. If the market is in a downtrend, the trade would look to continue with a short position, so going lower, with the presence of an inside bar. Of course, vice versa for an uptrend. So that means you are in a bearish momentum in this example. So open, high, low, close. This candle opens, open, low, high, close. We are going higher, but this is a continuation pattern lower. Why are we going lower with this? Because the candle is inside the previous candle. Because of that, you can anticipate the next candle to be red again. We're in a downtrend, we see an inside bar, and then you can expect the next candle to be red again. And the last pattern I want to discuss is the shooting star. And this is also a reversal pattern. A shooting star comes after an uptrend going up right here, but then it potentially indicates a trend reversal to the downside. The distance between the high and opening price of the candle must be more than twice as large as the shooting star's body. The distance between the lowest price for the day, you can say not the day, but for example, the candle itself. You have a daily candle, weekly candle, and the closing price must be very small or non-existent. That means we have this up move, but then goes all the way down here. Big aggressive buys, aggressive sells, indicating lower prices. And of course, this also looks like that bearish hammer, what we discussed before. If you see that at an important level, you can of course indicate lower prices to come. You have learned about candlesticks in this video. You are probably at the start of your trading career, or you just want to learn more about candlesticks themselves, but you want the time between you learning about candlesticks and you actually making a trade to be as short as possible, because you actually learn the most from just taking trades and making mistakes and learning from those mistakes. So I want already in this first episode, I want to give you an entry model, and in the later episodes, we're going to build on that. And this entry model has 4 rules. The first rule is that you go on the daily time frame. So that means every candle is 1 day. Then wait for one of the reversal patterns at one of those highs or lows on the daily time frame. Can be a morning evening star, can be a shooting star. And in the bullish example, which I'm going to show to you in a second, take your entry when the next up close candle closes above the last down close candle. And your stop loss is going to be below the low, and the target is going to be a 1 to 2 or a 1 to 3. And maybe this doesn't mean much to you yet, and that's fine, because later in the episode we're going to talk about this in detail. So here you have the rules. Here you see we are in a downtrend, and here is an important low, a daily low. So mark out highs and lows. Well, I marked out the low here. Wait for one of the reversal patterns. And what do you see down here? Down close candle. Then look at this wick. This is a bullish hammer. And then the next candle is green. So done. Take an entry when the next up close candle closes above the last down close candle. Which is the last down close candle? I would say that is this one, this red candle. Take an entry when the next up close candle closes above the last down close candle. Which candle closes above this one? I would say you can choose this one. So you can take an entry from here, or you do the next candle. It was already a big up candle. So for this example, I took an entry right here. If you're not familiar with what you're looking at here with the colors, if you take an entry in your trade, you take it at a certain point in price, and in a long move, so you're anticipating price to go up. This area is, here's your stop loss. So when you go lower here, here's where the trade is going to take you out. So for example, you take a trade with $100 risk. When price comes down here, you will lose $100. You take the entry here, entry. With a 1 to 2, that means your risk is 1. Your reward is twice, with a 1 to 2, twice your risk. So this area, this blue area is twice as big as this gray area. So you're aiming for a 1 to 2. So that means if price comes up here, we call that TP, take profit. You earn 100 risk, 1 risk, 2 reward, 1 to 2. That means big profit is $200. So stop loss below the low. We have that here, below the last low. Target 1 to 2 or 1 to 3. In this example, we have a 1 to 2. So TP is here, and we reach that up here. So we had a little drawdown. Drawdown means when price comes comes back below your entry, you are in a loss. From this point, you are in profit, and you can use this entry model. So the only thing you currently know is how Candlestick works, but you can already take in this trade based on your current knowledge. So again, mark out all highs and lows. We did that here. Wait for one of the reversal patterns. Well, we saw that one of the stars with a bullish hammer. Yes. Take an entry when the next up close candle closed above the last down close candle. This is the last down close candle. You can take an entry here. I took it here a little late, but still good. This green candle, up close candle, stop loss below the last low, target 1 to 2, and you have your $200 profit. If you take in a 10,000 risk, then of course you can make $20,000. That's for most beginner traders, not the numbers you want to trade yet, but I hope you get my point. Thank you for watching this video. In this video, we went over how to read candlesticks, how you can use candlesticks in the charts, some basic and intermediate level candlestick patterns, and you already learned your first entry model. By now, you should know what an open, high, low, close means in a candlestick, what a bullish candle looks like, how a bearish candle looks like, what kind of rules you need to use in the chart, and also you can already train yourself using the entry model from the bonus section. If you like this kind of videos, please like and subscribe, share it with all your trading friends, and I'll see you in the next one.